Hello everyone, and welcome to the 2020 NIADA Virtual Conference. My name is Jason Gosnell. I'm the Vice President of Business Development for Buckeye Dealership Consulting. Buckeye forms and manages insurance companies for buy here, pay here, and independent dealers across the country. This allows you dealers to take part in the profits of these ancillary products that you may already be doing or choose to do in the future. Today, we want to talk about how you, a retail or buy here, pay here dealer, can earn a commission or profit from selling those ancillary products that we talked about. The first way you can do that is considered a walkaway product. And this is where you, the dealer, are selling a product to the consumer, possibly financing it into the contract and earning commission for doing so. 100% of the premium is remitted to that insurer, and then they take part in the risk and all of the profits of that particular program. The second is considered a retro program, and this is where you, the dealer, still earn that commission. You submit 100% of that premium to the carrier. They take part in the losses and the profits, and then you have the ability to have a small profit share at the end of that program. The last is what I would like to focus on today, and that is a reinsured program. And this is where you, the dealer, still are able to earn a commission for selling that program, but now you're able to take part in 100% of the underwriting profits of that program. The premium would be ceded to an administrative and an insurance company. A small ceding fee is then sent to that insurer, and the remaining of those profits are sent to a reinsurance company, allowing you to take part in the 831B tax law. So what is reinsurance? Reinsurance is the exchange of risk of premium between an insurance company and a reinsurance company, and the terms of that arrangement can be spelled out in a reinsurance agreement between those two entities. A typical reinsurance structure would consist of a producer giving or selling a particular product administered by that company. The producer on a monthly basis would remit that business to the administrator or the direct right company. From there, that company would take the money and the premium and cede that to the reinsurance company. Premiums of a producer can never go straight to the reinsurance company. The administrator will handle all the accounting, the claims, and the administration of that particular program. So as a dealer, how do you get into the reinsurance business? What we do at Buckeye is utilize two separate domiciles of economic convenience. And this affords you, the owner, more flexibility, low capital startup cost, and a very favorable regulatory environment. By utilizing the 953D filing, it allows you to be a U.S. taxpayer, and you will file an annual tax return. All reinsurance proceeds held in your company are held on U.S. soil in U.S. bank accounts in a selected institution of your choice. The two domiciles of economic convenience that we utilize in the auto industry are in the Turks and Caicos and the Delaware Indian Tribe. Again, both companies you're able to afford and be a U.S. taxpayer. Moving on to the 831B election, this is the IRS tax code that governs these companies. Several things to talk about here are that the company is taxed on the investment income of the entity, not the underwriting profits of that company. The IRS limit for these companies is $2.3 million in premium per year, and that is a total amount of products that you can put into this particular company. So what are the advantages of you, the dealer, owning a reinsurance company? First, you're able to take part in 100% of the underwriting profit and the investment income of that entity. Next, that entity is taxed at long-term capital gains rates as opposed to ordinary income rates. This can be a fantastic estate planning tool where you're able to build a large amount of wealth over a short period of time that could be an exit strategy for you, your partners. It can also allow for multiple ownership entities with siblings, with children, with partners. It affords you a great exit strategy for you as a dealer. Next, the flexibility it affords you. You're able to white label and customize your own products. And last, the investment opportunities. You're able to invest the premium in this company in multiple investment opportunities to fuel growth and wealth for you, the dealer, long term. So how did the flow of funds work in a reinsurance transaction? First, your dealership or finance company will produce premium through the products that you're choosing to reinsure. On a monthly basis, you will total up and remit the sum of those premiums to the administrator and the carrier of your choice. Through processing through, your administrator will then cede the net premium minus ceding fees and commissions to the reinsurance company in the structures that you have. Once those premiums are in the reinsurance company, you have the ability to dividend out or possibly invest portions of the unearned premium in vehicles of your choice. On a monthly basis, the carrier will do calculations to give you the earned and the unearned premium, advising you on the flexibility that you may have. So what critical questions should you, a potential owner of a reinsurance company, be asking to potential providers and your advisors? First, where are reserves held and who is the trustee of my reinsurance company? Who has the ability to direct investments and what type of investments do I have? Am I able to borrow against the assets in my reinsurance company? Can I borrow against earned premium and unearned premium? Product tiebacks to your location. Do I have the ability to have the customer come back to my dealership, controlling the customer experience as well as driving new revenue to my service center? Do I have input in the underwriting review and risk analysis of the products that I choose to do? How does owning the reinsurance company impact the dealership profitability and other initiatives that I'm trying to employ? And lastly, are there hidden fees? A reinsurance company and the cession statement along with that should be completely transparent to you, the owner of the company. So as a dealer, what products do I have the ability to reinsure? Let's start with the limited warranty. This is a product that you can give to the consumer for every car that you sell. Put in writing and memorialize what you can and can't do post-sale. Get credit in the consumer's eyes and stand behind the car that you're selling. It's also a better way to account for the transaction that you may already be doing, which is repairing the car and working with a customer post-sale. The next product I would like to discuss is the vehicle service contract. This is something that you have the ability to sell to the customer at point of sale, and it protects that car and gives the customer peace of mind for an extended period of time. This could be done for terms as low as 6 months and for terms as much as 48 months and can be reserved to the reinsurance company and financed into the retail installment contract. For buy here, pay here guys, this can be put into the retail installment contracts, and for you retail guys, this can be something that is funded by your third-party bank and ceded to your reinsurance company. The next product I'd like to discuss are prepaid maintenance agreements. This is a great product for customer satisfaction and can be given or sold to the consumer at point of sale. For retail dealers, this is something that can be included in the amount of finance. Your banks will finance it. It's a great way to drive customer satisfaction and possible revenue and upsell to the consumer in your service department post-sale after they bought the car. For buy here, pay here dealers, this is a fantastic way for you to manage your collateral, having the customer come in, ensuring those oil changes and maintenance of the car are being properly maintained. Other products that we can consider to reinsure: tire and wheel packages as tires and wheels get more expensive, appearance packages, paint, body, and fabric on the inside, key replacements, theft replacement, and windshield protection. All can be insured for your customers. Collateral protection is the last product that I'd like to discuss, which is a great option for buy here, pay here dealers. In today's world, having your customer keep insurance on the car for the life of the loan is an everyday struggle for a buy here, pay here dealers. And then we find when the customer does have that insurance, it is a fight and a battle with the insurance company for the payout or any portion of a real payout of the value of that particular vehicle. Collateral protection insurance is something that's explained in the retail installment contract that allows you, the dealer, to tell the customer in the event that they choose not to provide or fail to provide their own insurance, you, the dealer, are able to place them on your policy and ask them to reimburse you for the cost of that policy. This helps protect your interest in the vehicle, thereby increasing your collateral recovery rate in the event of an accident. But more importantly, this can become a new profit and revenue center for your dealership in the event that you choose to reinsure it. So as you can see, there are multiple reasons why you, the dealer, should have your own reinsurance company. Thank you today for spending time with us at the virtual NIADA 2020 conference. We would love the opportunity to talk to you more about how we can get you in the reinsurance business and start taking part in the profits and the investment income of your reinsurance company. Please visit our website or reach out to us at your convenience. We would love the opportunity to earn your business.